Hey guys, thanks to Vinny pointing out this move in no gold. This is gold. Wanted to show you what is happening here and maybe an opportunity to start paying attention and maybe getting a run on gold. We had a dip below the weekly ones, and to give you context, let me put the local on. Here are your weekly ones in the dashed lines. And so it dipped below, and then that's by the dip, inside the monthly ones. The monthly are the solid lines. And inside the quarterly ones, the quarterly are the dots. So the quarterly is the main contract. Easy for the dealers to keep the spread inside this range. For the cheap risk, these are just the ones. So I'm not showing you the twos or the threes. And so showing you how price stays inside the cheap risk on these multiple time frames. And so you can see how they kept price inside the ones, and that way the end of the week they keep their premium. Easy peasy, right? So keeping it inside, when it goes outside the one, like right here, it's usually running to a two or a three on one of these time frames, daily, but more likely weekly or monthly or quarterly. So I'm just showing you the ones. And when you get a range expansion, when you break a higher time frame level, that is when, you would want to take a hedge if you were, if you're selling inside the ones. And so when they hedge, they're usually buying calls or buying puts, right? Um, so anything outside that line, they would benefit from. And then if it crosses back inside, like it did right here, the hedge is taken off and they're back in their delta neutral. So to show you, that's basically how all markets work, right? We're inside these spreads, and all markets are the same. And some markets, they'll stay inside the monthly forever and never, venture out. It's a very safe place to invest your money. Do you see this? You see how it went to the top and then went down to the bottom and bounced? Um, they dipped it here at the end of the month, um, but it didn't get past their break even. They bounced it on the weekly back inside. So by time August 30th, do you see that? It closed back inside. They just gave them a little heart attack. But that is it on all markets, basically how order flow works. And the market is, 60% driven by pension funds, 401ks, and, investments. So they can't be wrecking the market all the time, letting threes break. I'm not showing you the threes, we're just looking at the ones right now, but we could put a, three on here, one, two, three, and if it breaks the three, it's usually going to be running to a higher time frame level. And if it breaks the last of the last levels, like it was fixing to do before the bank sent it back up, that's when, the world ends and everybody's hedged. And if everybody's hedged, including the banks, it's going to go flying that in that direction. So they didn't want to do that. So you have to know where you are on the distribution, and to tell, pretty much how the narrative is going to be shaped, because it's going to be shaped on what that distribution is doing, pretty much. So inside the daily, weekly, monthly, quarterly, I've got a few intraday time frames. So I'm showing you the 100-minute and the 60-minute, or just the 100-minute here. I think I've got a 60 on here. Yep, there it is. And those are these two boxes inside. And you'll notice that in a downtrend, you can trail the top of that box. Do you see that? And in an uptrend, you can trail the bottom of that box. These are time periods in the market. Now, do you see this long wick as it went down? Um, that can happen, to shake everybody out. So it came in here and swept all these stops as people were trying to position, catching a move off of your big bull bar breaking the daily range. So I have an ability to put extensions of the distribution behind any one of these levels. So we can use fibs off of the PT1, 2, or 3. Normally, I use it off the 3, the last one, to get my hedges or my directional trading outside the 3. But I can also run fibs off the 1. And when I do that, I can get a one time the distribution off the 1, which a lot of the times will show me where that extension will end. So just using a statistical method outside of the first standard deviation, extending it out one time. So that's pretty cool, I think. And sure enough, I don't know if you can see that price, did would have grabbed it. So if you had a limit order to go out and take your profit there, you would have been spot on. So you're leaving the middle of this distribution going out, right, in an uptrend, and trailing the bottom of this one. Or you can trail the extensions, whatever you prefer to do. Um, because if you trail the bottom of the one, you probably want to trail closes and not wicks. So you're going to have a little bit of a variance anyway. So having um, this on will help. I need to do the same thing for the 60-minute. So I need to put it on both of them. So let me go up here to the 60-minute. Put the fib on. And we'll just run it out one standard deviation on the 60-minute. See how that looks. That looks really good. I really like that. That allows me to get hits, tuck my stop, park my, risk behind these lines, and come in and look at this. Understand that if it breaks certain levels, what is happening, and more or less, if it gives me a cross recross, you know how I love those. So if it crosses down and then crosses back up, that's a good indication that you're extreme oversold out of bounds from your middle of your risk, was going to snap back inside the box. Great locations to try to snag a trade off of. So just be sure that you were aware that you can set this up to run your extensions off of the 1, 2, or 3. But definitely I wanted to show you that trailing a bar close, if you can, set a stop behind your distribution and safely, move this up. You're going to be away from your risk quite a bit, significantly. So, you would have to keep that in mind. Maybe put this on a micro account and just put a long trail up and allow it the wiggle room that it's going to need to go to target. And if you had a higher time frame target in mind, um, you'll understand what you're looking for range wise. So I can add gold to this and understand where my daily, points are going to be. Um, how far, the range is going to be in certain volatility, low vol, medium vol, high vol. And that is so vitally important to know where you are on the volatility, if it's low, medium, or high, because it makes a huge difference on whether you're going to hit those outer ranges or you're going to stay inside. So, knowing whether you have a better chance of being low vol inside the distribution to run your algos is much more preferable than being big swings, wild swings, unless you want to set those wild swings return to the mean trades up. That's when you want to, focus on these outside volatility touches. So, set your levels and say anything above a 7, you're going to be looking for, moves to your fibs and try to catch that move back in um, to the value if you want to try to set up an algo like that. And especially if you're coming back, that first inflection back down where the volatility turns over and starts doing a vol crush back in, then every single high or low um, that you get, you're going to be wanting to RTM it back in as a possibility. So it's real easy to set up the bloodhound to capture this slope, um, and incorporate that with the strategies that you build. And so to put a slope solver on, you would put bloodhound on your chart. And guys, I have not updated to the latest version yet. I'm waiting for NinjaTrader version to settle in. They're changing their architecture, and so they're moving everything to a different drive. We won't have our documents folder anymore, but they'll announce that in a couple of weeks. You'll get the information. So I'm going to be waiting for Shark to make sure everything's running okay before I change everything over. But then I'll be updating to the new version for sure. Once everything gets normalized. You know how technology is. There might be some hiccups at first. You never know. But I'm sure everything will be fine. They usually won't release anything until it's been very well tested. So let me put the Bloodhound instance up, and we'll start a new template. And the first thing I'll do is name it. So we'll just call it um, GPT slope and threshold. Okay. And so what I want to do is make an annotation of what the threshold is first of the volatility zone that I want to have high, medium, and low. So high vol is going to be 10, and so if I put this on 5, that would be anything above 5, say 5 to 7. would be medium high. Anything below 5 would be considered low. Anything above 7 could be potentially labeled high. So you could, categorize this however you want. This is gold. Um, but just eyeballing it, I can see that a lot of these peaks come up to the 5 and then turn back in. You see that? So this is a good level. Here's another one at 5. Here's a 5. Here's a 5. Here's a 5. There's a 5. Here's a 5. So this 5 looks really good. We want to keep 5 for gold on a 60-minute. And 10 or 7, see 10 is your high vol. Anything above 10 I probably wouldn't want to trade. So there is a way to even, eliminate any trades in case it gets above that. Because then you're really, really, really into COVID land type stuff. And yeah, like right there. And here you probably wouldn't want to be in the market. It would cost you an arm and a leg. But maybe you could set up an algo to be aware when it, rolled back in, crossed above it, and then came back in. I don't know. You'll have to look at this, but that's something I would certainly want to be aware of, that volatility just got, off the chart, and how you want to address that, coming back in or just, staying out. I'm sure the bar was huge. So if you want to, create a cocoon and just trade when price is underneath the 5, for instance, in gold, you can put up a threshold solver and put a 5 threshold and just add the JATS PT2, first one. Don't make any changes, just say OK. And then right here, do you see on the side, we're just going to type 5 and the A and B. So if it's greater than 5 for a long or a short, you would get a signal. So this one, we don't want it greater. We want it less. So we have to keep putting 5s in here. And now it says less than 5. So by putting it into D and E as our threshold, we're telling it what threshold we want to trade. I'm going to put the greater than to 0 and put a less than. A 1 there. 1 and 0 for, computers. 1 is yes, 0 is no. Alright, so if it's less than 5, I know what world I'm in. Okay? So all of a sudden, I have just gotten myself into a situation where I know what the volatility is. So I know if I look at my chart, and now I can probably take these fibs off because I should be, oops, inside the distribution. So I no longer need fibs. And there we go. In the ones, it's telling me that I'm in low vol, and it should, for all intents and purposes, stay inside of this 60-minute, 100-minute one, and it is by and large. If it is into a breakout period, you're going to have it above the 5. So we'll do another one and make it a greater than. And now I will reverse this and put it back greater, greater. And here we go. Anytime it's bigger than 5, that's when I get the breakout, right? So if you wanted a strategy of when it might be breaking out and running, you can do this on all instruments. Are y'all starting to pay attention? So if you wanted to know when will it start taking off and maybe giving you some range expansion so that you could try to trade to one of those tails or another level like a 2 or 3 target reached, you would want to be going out, not back in, right? You would want to be going out. So you can add a slope solver, put the PT back in, don't even have to change anything. And we want to put a function node, a long short modifier on it, and change this to difference. And we're going to change the mode to long short. And we only want to go long short like that. And so if we add this, a logic node, combine it with the threshold, this is telling the algo to only take a trade above a 5 threshold when the slope is going up. So when the slope is going up, it means that there's a lot of volatility force coming in. And often you'll get that breakout. Sometimes the market pins it. And even though you have force, you may not get to go anywhere because some dealers are not going to let it go down at that point. And this ended up rolling right over. So you didn't sit there getting multiple long signals. It rolled in. So just knowing where you are on these distributions and having a trade plan for the day. So again, if we think that the market is going to be trading, um, let's see, it was high vol on Friday. Just got up right up to the high vol line from the medium to the high. So with up slope, and it went right, got that big move. So, trade to your fibs or to your, I mean, I would have probably taken it off at the monthly one, right? So, have a plan of what you want to do, but you can, put a bar direction on here and a trend filter. So the trend filter is very subjective. And I have my linear regression trend line, so I have a no-brainer. The reason I created the linear regression trend line was to give me a trend filter and make it, linear regression. Um, but you could use anything. You could use a VWAP. Um, hang on a second. I did this wrong. Retarded. Put the close there and the LRT below. There we go. Sorry. Here it is. So you could use VWAP or EMA or whatever you got if you don't have the LRT. But so here's a little range expansion, set up for gold that fast, right? And Betty, let me tell you something. If you were trying to code this and see, I'm glad you can do it. You'd be sitting here all friggin' day doing it. And this is how fast Bloodhound is, by the way. Just like that. Just get an idea, what would it be like for this market above this threshold? Um, do a trade where you're going back in. So if you have, above a 10 threshold or a 7 and it's coming down. So let's do that. So let's call this greater than 5 upslope. What about one that it is greater than 7 downslope? Okay, so let's copy the greater than 5, excuse me, and change it to 7, and just change that, change that, change that, change that. So now I have a greater than 7, and my slope is already set up. So all I have to do is put my greater than 7, pop a logic node and on it, and then combine my new slope. But this time I'm going to go short. I don't want to go long, I want to go short. So I can change this to difference and short. And wait a second, let me go ahead and put a bar direction on it. And I don't want to use the linear regression coming back in. And here is why. Because it won't be in a trending state at first. Um, and I've got to convert this. I don't have it set up right. So let me take the bar direction off. So here's my signal, right? It is above 7 and it started to roll over. And here's another signal above 7 and started to roll over. And look, the price went down. So here I would have taken it off at the monthly one, 47 points. Here's another above 7 rolled over and it came even further down. So just be aware of when you are out of range, that is when you want to be considering coming back into the value area, because that's how price trades. It goes from the outside back in. Um, or when it could do the same thing on these higher time frame levels, monthly, quarterly. That's why we pay attention to it. But you know, being able to take a scalp or position trade, knowing what you're doing versus just um, not having the threshold and the slope on your side, it just gives you a huge advantage of what other people don't have. And it is important. I wanted you to know that you have that. And then you've also got the ability to move these fibs between the 1, 2, or 3, and play around with grabbing trades at these statistical levels. Look at this. Um, and if you're below a major structural area, get used to being a dip spotter, right? I'm getting really good at it. This is the dip. When they say buy the dip, that's what they mean. Jelly bean. So look at that. It went below the weekly one and all the way up. And again, what I think is so cool about this is that you can trail that up, because if it breaks one of those, like a big red bar below it, that trend is over. but you know that you're trending down or up when the algos are respecting those ones with the closes like this. All right, well, that's about all I have for you today. I've got this template and the one that I built for you last week. Maybe we'll put these on the agenda for Wednesday. All right, guys. Thank you so much. Y'all have a great rest of your weekend, and I'll see you next week.